Hello, what's up everyone? Welcome to the Road to Glory on Minority Trades. This is Lalo. So on this episode, we're going to be reviewing the trades for the week of December 30th to January 3rd. And I'm beginning this week with my account balance at $341. So I'm down 160 from the beginning of my account. Remember I started my account with $500. So I'm down 160 bucks. And at this point, I'm battling how to block out all emotions, because when I was paper trading, I felt like I was ready. But you have to keep in mind that paper trading and then trading with your hard-earned money is very, very different. When you're paper trading, there's no emotions involved. You can get in a trade and follow your risk all the way down and not care if you lose, because you're not losing anything. Maybe you lose a little bit of confidence because you're not right on your strategy, but that's it. When you're trading with real money, you know that you're really losing your money and you can blow up. And yeah, that's kind of where I'm at. I'm trying to battle blocking out all emotions, but of course, in order for you to actually block out your emotions, you need to have confidence. And in order for you to have confidence, you need to have consistency. You need to be consistently right. And if you're consistently right, you'll of course be consistently profitable. But that's why I don't have any confidence at this moment, because I've been taking loss after loss. So me not having any consistency in my trading is leading to me not having any confidence, which leads to me not being able to block out my emotions. So let's go ahead and review the first trade for this week. A $32 loss on SVRA. Let me pull up the chart. So SVRA on December 30th, 2019, it was up on news that they were granted a breakthrough therapy designation for treatment of APAP. So again, I don't care about the news. All I care about is these technical indicators. So it was up on that news. It was up from $1.90 up to the high of $4.29 during pre-market. Now, as you can see, it's already up about 300%. It's already overextended. So I see it spike, comes down. When it came down, I was like, okay, I want to see it bounce back up and break the high a day, and I'll buy the high a day break. It failed, went red. I saw that it bounced off right here. It looked like a double bottom, but it's not a convincing double bottom. And it comes back up. It's starting to break through the green, gets rejected, tries it again, gets rejected, and then on this third time is when I got in. So I thought, okay, the third time's a charm. It's gonna go green and test the high a day, and I'll take my profit. But what I'm doing wrong is I'm anticipating the move. I should have waited for it to kind of break this move right here, break this point right here, 4-2, because you can see it double topped right here, got rejected. I should have waited for it to convincingly go green and then break this and take my entry at least 420. Use the red, green to red move as my risk, or even this bottom right here, and then play it from there. But I find myself doing that a lot, where I'm anticipating moves. And I'm also not looking at these red flags. Like the red to green move was one of my go-to patterns when I was paper trading. It was actually my favorite pattern, and I had a rule that when I play that pattern, Actually not a rule. It's based on my data that I had when I was paper trading. That the ones that they would fail were the ones that had this morning spike fail. You know, this is a fail. This is a failed morning spike. You know, it spikes in the morning, right out the gate, gets rejected, tries to bounce back up and gets rejected right there as well. And you know, normally the ones that the retrograde moves that turned out to be good were the ones that they would go red at the open. You know, this morning spike, this failed morning spike is a huge red flag for me. You know, because it tried to run and failed. You know, and not only that, but look at this huge overextension during pre-market. It already made its move right here. Now you can see at the end of the day, it came back up. You know, so yeah, so if I would have held it, I could have got out for break even or a small profit. But again, you know, I'd rather stay disciplined and cut my losses quick, because hold and hope is not a good strategy. That only leads to disasters. So, lesson learned, you know, take in consideration the red flags. The same way that you can talk yourself into a trade, you know, you should also try to talk yourself out of it, and then see which side has more indicators. You know, are there more good indicators than bad indicators, and then take your position based on that. So yeah, after this trade, my account is at $308, the lowest it's been since the beginning. Let's go ahead and look at the next trade. A profit, finally. This is the moment I was waiting for. My biggest profit yet, $41. Since the beginning, this is the biggest profit I've had. It still doesn't outweigh my biggest loss, which is $77. But we're getting there, you know, we're making some progress. Let me go ahead and pull up this chart for you guys. INPX. Now, INPX, it just had a reverse stock split. You can see I traded on this day, on the 2nd, and then on the 6th, it had a reverse stock split, 1-45. Now, what a reverse stock split does is it lowers its share size and increases its share price. So when I traded it, its share size, its float was 57 million. So you can do the math like this: 57 million shares divided by a 1-45 split divided by 45 is a 1.26 million float. If you go on Yahoo Finance and go on statistics, you know, you type your ticker right here, then you go on statistics, float 1.27, close enough, 1.27. So they reversed their share size by 45, and that also increases its price. When I was trading it, it was around 30 cents. So if you do 30 cents times 45, which is again the split they did, 1-45, it's at $13.50. I bought around here, around 30 cents, and look at that, now it's at 13ish. So that's all it is, you know. And that's usually they do that for compliance issues with NASDAQ. You know, they want stocks to be priced at above $1 or so they'll just do a reverse split to raise their price. So yeah, let's go ahead and review the trade. So on this trade, I was looking at it right here. I saw it already had its high at 30 cents. Right here was at 30 cents. You know, never mind the price that it has on this side. At this point, it was at 30 cents. So I saw it had its high at 30 cents. I saw that it was climbing back up, and I got interested in it when it was right here. It was starting to climb back up a little faster, and as soon as it broke it, I didn't want to chase. I know that these usually pull back and then hold at that level, and so this is where I bought right here. I bought on this little pullback right here, 1,000 shares. Again, it was at 30 cents, so 1,000 shares, that was about a $300 investment. It started to spike up, and then I didn't like how it was moving. You know, I would expect it after the high day break to just run, but I didn't like how it was hesitating, so I took off half right here. I sold 500 shares at I believe it was 32 cents or 33, and then I sold the rest into this little spike at 34 cents, so resulting in a $42 profit. And yeah, that was a pretty good trade, I think. I could have probably got maybe like 2 more cents out of it, but I'm fine with that. You know, at this point, I'm not worried about catching the exact bottom or exact top. I'm just worried about catching the meat of the move and taking some profit, because, you know, again, I'm building up my confidence. I'm not only thinking at this point of building my account back up to break even, I'm also thinking about regaining that confidence, you know, that satisfaction of knowing that I'm right. You know, because once I get my confidence back, I'll be able to execute my trades a little better, and then that's where I'll be able to find some consistency. So again, I started the week with $341, and I ended with $350, leaving me with a profitable week of $9. You know, nothing life changing, but we're getting there. You know, I feel like I'm getting a little better. Again, I would want to see more consistency, and yeah, you know, I'm still growing as a trader. You know, I'm a beginner trader still, and you can see, you know, based on my losses that I've been taking, you can see that I'm still a beginner trader. But that's it for this week. Thanks for watching. Again, if you liked it, give me a like and subscribe. I need to pay my rent. Thanks for watching. I'll see you on the next video.